Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, so if you're not aware, in the States, we are in a holiday. It's President's Day. So our stock market is closed, but the futures market is open. So we're going to look at the same things we do regularly: the dollar, the US indexes, and of course, oil, gold, silver, and Bitcoin. Okay, so it's going to be a normal recap, but the liquidity levels are going to be very, very low. We're not going to have a lot of volume. So I don't expect much action today, at least in the US side of the markets. Crypto has been having a pretty good day. Again, we'll go over that. I just want to emphasize very quickly, if you are interested in any of those services, I do provide swing trade services for both crypto and stocks. I give you really, really good potential trades. Of course, it's not financial advice. You want to check it out for yourselves, but our trade history has been extremely successful. You can join our Discord. The Discord is totally free, and you can discuss with a number of different traders on different experience levels, and really find a lot of values. A lot of cool people in the Discord. I'm blessed to have them. And then of course, I do provide tutoring services and a day trading room. So if you want to trade with me in real time, or you want to learn from me, those services are available. And I will say, I find that is the most valuable service I provide, in my opinion. And I really, really hope that you take seriously trying to get good at this skill, because it is a great skill to know whether you're in a good economy or a bad economy. You always have something that can produce income for you. Okay. All right. So starting off with the dollar. Dollar has been pretty much playing out as expected. Now, we did have more weakness here than expected. So if you see how the dollar, had been riding this ascending trend line for quite some time, then had a nice parabolic rally up. And then once we broke here, I was very confident we'd break all the way down towards here, and that's what we did. I did think we hold it a bit stronger than we did here, but as we have seen, as we approached 100.39, we had a nice impulse up, then came back to retest that trend line, holding the bullish fair value gap right here, and then having a little bit of a continuation move to the upside. And so far, it has been actually quite lackluster. I have been looking for a much steeper move going towards 104.88, and then really back towards these bearish fair value gaps up here, but we have not seen that. And the daily candle we had closed on Friday was quite bearish. This does imply some continuation. Now, I'm not looking, at least right now, for these lows to get taken out, but what I am looking for is a higher low structure to form. So if you want to understand what I'm saying, take a look at this. So we've dropped here for a couple weeks to a couple months. Then as the drop slowed down, we went into this nice tight consolidation. Okay, then we had the impulse up. This consolidation, we are attempting to change character after taking out this small little high pivot. So what I'm looking for now is, because of Friday's daily candle, look for a pullback to potentially take out these low wicks. Okay, come back into this fair value gap, or at least hold 102.71, and then make a higher low structure from these lows down here. Okay, and this will then potentially lead towards a continuation higher to take out this high pivot that's just formed, and then maybe get towards this descending trend line, towards these bearish fair value gaps, and potentially even a higher spike going towards 106. Okay, so this looks great for short-term bearishness, but mid-term bullishness. And if you've been following my recaps, I'm actually quite bullish on the dollar over a decade span. If you want to understand why, just go back a couple of recaps. I do talk about it often. I don't want this video to be too long, so I won't go into too much detail here, but I do call this the decade of the dollar, same as the decade of oil. So if you want to know more history on that, just make sure to watch my previous videos, or continue to follow my videos going forward if you haven't, because I'm sure I'm going to talk about it again in the future. So watch for the dollar to break down over this week. Again, slightly, it's not going to be a major breakdown, and then look for continuation higher. In this breakdown, we should get maybe one or two more legs up in both the crypto and equity markets. Okay, now let's take a quick look at the Dow. So the Dow is trading within this tightening structure, within this triangle, had a nice bullish break from its descending trend line. Now, I'm in the camp that I do think we're in a bear market rally for most everything that's a risk on asset. That includes the stock market, that includes crypto. So If we do break down from here, it's totally fine, makes complete sense. Now, it doesn't mean that the rally's over, but it does mean that we are going into a much deeper pullback that will likely bring us all the way back down for the Dow to 32,000 at best, and then at most probably going down back towards 30,000, 31,000. And then we'll see if we'll make that higher low structure from here, because make sure to pay attention. When you're attempting to change character in the charts, it's very clear, right? We've continuously made lower high, lower high, lower high. We should say high, lower high, and lower lows, lower lows, lower lows. And then finally we broke character by taking out this pivot high, and now if we do pull back, we're going to be trying to make that first higher low structure wherever that may form. And if that does happen, then you're going to look for potential continuation to challenge these highs and then ultimately get towards these levels up here. And that's my maximum. Okay, so if we are in a bear market rally, this would be the max level where I would expect price to stop. Now, never trade your expectations, just trade what the chart tells you. But if you're going to forecast, just keep these levels in mind. If we show major weakness there, it is very probable that we have made our first lower high on the macro, right? We had the all-time high, we broke up, and then we made our first lower high if we show major weakness here. Okay, so then it would be probably very wise to then look out for more signs that we are continuing the macro downtrend, which will then eventually take out these lows down here. Okay, so this may take all of this year, or it may take half of the year, or maybe the beginning of 2024. The timing aspect we can't know, but we can understand the potentials of the structure. So always keep the potentials of the structure in mind, and then never forget to trade the chart that's in front of you. Okay, so right now, if you're trading this chart, honestly, you should be neutral, doing nothing. You're in the triangle, wait for it to break either direction, and then look for the next levels. Upside is clearly these pivots up here, so about 35,000 to 35,500, and then downside is going anywhere from 32,000 all the way down to 30,000. Okay, next is S&P 500. So S&P, again, I'm looking for the pullback as well, as that is the most probable path right now. And if we do pull back, I'm looking for a pullback back towards 39.20, potentially a little bit higher if we're going to be very bullish, so 39.60, 39.50, pretty much grabbing the liquidity under these levels, coming back to retest this descending trend line we broke bullish, and coming in to fill this bullish fair value gap here. Okay, so if we're going to be bullish and we hold this level, this will be a very nice hold, and then it'll lead to more continuation back towards this bearish fair value gap to take out these highs and fill this liquidity zone, and then potentially start to threaten these pivot highs as well. So getting back towards the 4,200, maybe even 4,400. Okay. All right. Next is NASDAQ. So NASDAQ, out of the three indexes, had the highest extension, which isn't surprising considering it is also the most volatile, being it has the most risk on stocks in it. So it pulling up, technology getting a nice boost. NASDAQ being this extended is not unexpected. And this is trading between my major green zone, okay, and also within this bullish fair value gap. And so far, I would be fairly neutral on it until the Dow kind of shows us the way. Now, I do believe the Dow is the granddaddy of it all. So the Dow will show us the way. The S&P, arguably the most important index, but if you want a good idea of where you're likely going to go macro, the Dow will show you the way, and NASDAQ will follow the two. So for me, looking at this, we're going to stay in this general zone until the Dow breaks up or down. If we break down, look for an aggressive move down on the NASDAQ, all the way back down quite quickly, in my opinion, down to this bullish fair value gap here at 11,600, 11,550, all the way down to like 11,400. So this general zone would be the first level I'm interested in. Then a grab under here, so a nice little sell off, maybe a little wick down to this level here to grab the liquidity under this little pivot. So any stops that might be sitting there will get grabbed, and then potentially, if we're looking for more upside, making that higher low structure, then that may be the place where we can look for continuation up. Okay, so I am bullish, midterm, but short term, I have to be somewhat bearish unless the dollar really continues to weaken heavily. Okay, if the dollar goes into consolidation, then I do think that we're going to still see some downside on the indices. If the dollar does weaken heavily, going into tomorrow and the rest of the week, then look for upside on most risk-on assets, including the indexes. All right, so next is oil. So oil, again, oil is my one of my most important charts, arguably the most important chart I'm looking at. I think this chart is extremely bullish when you look at it from a monthly and weekly time frame. It's had a massive retracement down after a massive move up. So this is very bullish. It is making its way back down towards the monthly breakout level, which is over here. So this is the monthly breakout. We are retracing back to that. Now, in my opinion, we've got into the zone where if we are ending this downtrend, if we are breaking through to go to the upside, we have retraced enough. Now, I don't know if this is enough, but just looking at the structure, it is enough. We've retraced enough to have a healthy pullback and then lead to major continuation back above 90, back towards the hundreds, okay? So we have retraced enough. Now, does that mean we're going to do that? I'm not too sure as of now. Right now, the chart, when I look at it, is telling me we're going into a squeeze. It may not look like that, but this looks like the early beginnings of a triangle structure starting to form, okay? So we have the tightening here of the pivots here, and then down here, as we make this, we're probably gonna make another higher low kind of structure here. We're gonna tighten up, and I think the reason why is because the dollar is going to really make a decision in the coming days to weeks. And whatever the dollar does, oil is going to respond, because remember, as the dollar is the world reserve currency, mostly all these countries have to trade in dollar for their oil. It's going to be very reactionary to the dollar movement, to dollar volatility. So we want to watch oil as it starts squeezing, probably in tandem with the dollar squeezing, where we're going to go. One of them is going to front run each other, okay? So if oil starts breaking out, then look for the dollar to get stronger. If the dollar starts breaking down, then look for oil to get weaker. And then the next major level for oil, it's still bullish even down here at 60, okay? So this descending trend line here is actually the breakout structure that oil broke on the monthly. So it could come all the way down there. If it holds, it does have a bullish structure. Now, the most bullish structure it could form is actually holding here and then breaking out. That will show the most impulsive structure on the monthly. But overall, I have to be bullish on oil going forward for the next coming years, just like I am on the dollar, because of their monthly structures. But even in that scenario, if you're looking at a bullish decade, there's no problem having a bearish 1, 2, 3 years within that decade. It makes complete sense in my book. So we may be in the process. I would say we've had a fairly bearish couple months on oil, and potentially maybe even a year if this prolongs in selling to 60. So that'd be a full bearish year on oil if that happens, okay? So next is gold and silver. So gold has played out incredibly well. I will say has outperformed my expectations. I've said this numerous times. We were long in the lemon garden down here as we broke out. Most of our gold positions, we were in gold miners, we were in GLD, etc. Same with silver. We really banked in most of those positions. We closed them out all throughout this consolidation. I did think that we would break down a little bit more from here, but we didn't. We had to spike up, but it came into my fair value gap here. I said we'd look for major denial, and that's exactly what happened. Pulled down, and we've come into the level that I've highlighted for weeks. We had a nice tap into this bullish fair value gap, and this is a great structure for continuation to the upside. I would look for a move back towards this bearish fair value gap, and then we're gonna have a decision time. Are we gonna have just straight up continuation higher? This is the least probable path. What's most likely going to happen is that we'll come up into this level, fill out as much of this liquidity as we can, then pull back, and then start a squeezing structure that could be a descending structure that actually has a bearish undertone, or it could be a descending structure that actually has a bullish undertone. So what I mean by that, if you do a rising structure like that, it's gonna look like potentially a rising wedge and then break down further, or we're going to make this lower high from this high here, break down further, take out these lows to grab the liquidity, come back to 18, make another lower high, and then come back again and making like a descending wedge structure. Okay, so a lot of decision times. We're gonna have to wait and see what happens. But overall, I am bullish on gold. Even if we do start an ascending structure, it's just a major pullback from a major rally. I do think gold has the potential of making big moves as we start seeing the geopolitical stuff progress further into the year. Okay, now breaking 2000 for gold is going to be very difficult. Like I just mentioned, it's going to take a lot of geopolitical things regarding the war and other I would say values for certain fiat currencies to kind of be discussed and changed. We'll have to wait and see, but there's going to be a lot of momentum for gold to reach 2000 if unfortunately the wars both in Ukraine and Russia start to progress further, and then Taiwan and China also start to progress further. So if that stuff starts to occur more so, there's going to be a lot more of a push towards gold getting towards 2000, a bigger demand. So we'll watch very closely, but overall I have to be very bullish on gold. Next is silver. So silver, unlike gold, had a more clear topping structure here. I was quite bearish up there, but it's come into my fair value gap level, and as you can see, spike down through it. Beautiful hold so far, and just like gold, I'm looking at wonderful continuation back towards short term, back towards the upside, going towards 2250 to potentially all the way back up towards 23 and change. So I'm really liking how this looks. Now we could be in the process of just making that lower high, and then we'll see, are we going to have a bearish characteristic, or are we going to have a bullish characteristic? So are we going to start ascending up like this, and this is going to have a more bearish undertone because it's grabbing liquidity. Again, sorry for my poor doodles, but I'm trying. But hopefully you get the idea of what I'm saying. When you have price action kind of grinding up after breaking a trend, you're looking for a breakdown from there, because smart money is luring dumb money to buy these highs, buy this structure, and then they sell on them and pretty much punish them. Okay, so it's grabbing the fools that way. And then same thing to the downside. If we're breaking down, same thing. Smart money is pretty much baiting the dumb money to shorting these levels while they start building out a descending wedge structure. So we're going to watch this very closely, but just like gold, I have to be bullish on silver. All right, next is Bitcoin. So let's take a quick look at Bitcoin, and then this recap is done. So Bitcoin has been pretty impressive. I will say it has outperformed a couple things here, at least for me. Okay, so quickly before I start drawing some lines here, this consolidation here did imply a breakdown, and I was looking forward to that breakdown. I was honestly looking for that breakdown to break further, coming back down towards like 21,000, really coming back really deep into this consolidation here, but we didn't get that. And what's crazy is not only did we not get that, we had one big sell-off here, and then we quickly, over a span of 4 or 5 days, just had a sideways move and then a massive impulse. So looking at this was very little time of consolidation. So this is a very powerful impulse up, but it's quite unhealthy as well. Okay, so we have to be very careful with Bitcoin and how impulsive it's been. We do want, if you want a sustained rally, you do want more time of consolidation, especially at a general support zone or a general liquidity zone that's going to be of interest. Okay, because all we did was really just fill this daily fair value gap here. So this bullish daily fair value gap got filled for the most part. Didn't get the exact bottom, but got traded within here. If we traded through here a little bit longer and then we had the impulse up, in my opinion, it would look much more healthy, but we didn't, and it's still impressive that it did. We did have a very bearish daily candle here, but right now we are looking to threaten that high. If we can take out this high that happened here on February 16th, and the high being 25,262.85, if we take that out, look for a big impulsive move, probably going all the way up to 27,000. So this is very interesting to watch. Now, what I'm looking at, obviously, when I look at this, clearly we've had a pretty nice breakout structure here. So drawing from the all-time high, this descending trend line, to this pivot here, you clearly had a breakout structure here, came back, tested the zone of the trend line, so it didn't actually get all the way down towards it, but got close towards the zone of the trend line, continuation higher. But what I'm watching is the monthly. Okay, so the monthly is what's most important to me right now. So what we want to watch over the next coming days, so about 8 days, 9 days, we want to see this monthly candle close above last month's high. So if we close above last month's high, that will imply we have more momentum to the upside, and we should see continuation getting towards my ultimate target zone, which is around this level here, this bearish fair value gap on the monthly. So we're looking at anywhere from 32,000 all the way up to 37,000, 38,000. Okay, so that's my ultimate target zone for Bitcoin on the monthly time frame. The weekly time frame, I have another level that's just prior to this, which is the weekly fair value gap right here. So right here, so it's 26,850 to 29,239. So this is the weekly level I'm eyeing as well. However, I am just going to round it down to about 28,000 is the actual level that I'm looking for on the weekly, just to keep it kind of clean. Okay, so that would be the major level on the weekly time frame that I would be eyeing as well. There's gonna be a lot of interest there, and it coincides with just about the lows of this consolidation down here. So watch for this to get tested if we should break up from that daily bearish candle. And there's a lot of bullishness when you look on the monthly and weekly. And going back to the monthly very quickly, it's just very reminiscent of what happened in 2019, where we did have a bear market rally, and then we had that continuation down, and then eventually the COVID spike happened. So I am seeing something kind of similar here, where we had all-time high made, then we had breakdown, and then bear market rally. All-time high made, breakdown, bear market rally. And then as we get towards, the near all-time high, we start looking to make our first macro lower high. Now, it's to be determined, are we going to actually take out these lows, or are we going to do what we did here back during COVID and just make a slight higher low? Again, I don't know the future, but I will say the probabilities are higher that, at least right now, that we do make a lower high here, that we do make a bear market rally structure, and then we do break down beyond the lows. The reason why it's unlikely to hold these lows like here is because if you look at the equity markets, unless something's about to fundamentally shift with the Fed, like very, very soon, they have a ton of room to the downside. The Dow, the S&P, and the NASDAQ have a lot of room to the downside. So that may happen latter half of this year, next year, who knows? But there's a lot of downside for the markets. And if Bitcoin's going to continue to follow them, which we have to assume it will, because it has shown no major signs of decoupling, Bitcoin will also fall down with them. However, the caveat is, if something's about to change with the rates, where the Fed's going to completely pivot much sooner than expected, or far more aggressive than expected, then of course all bets are off. We're gonna fly. Okay, so that's why I always say, don't trade what may be. Don't trade news. Trade the chart. Look at the chart, and then you can use the chart to kind of map out what may be. But never trade your expectations. Just trade what the chart is giving you, and you'll find yourself to be not only at peace, but also more profitable. And again, if you want to learn how to trade like I do, or you want me to help you trade the way you want to, I've been trading for over a decade now. I'm very, very savvy with trading. I would say I've done quite well. I do believe that I can input and give you good advice and give you good habits that will help you no matter your trading style. Swing trading, day trading, doesn't really matter. There are certain ways to look at charts and ways to position size in trading that is just universal in my opinion, and I believe I can be that person for you. If you are interested in that, make sure to join that Discord. You'll find the link in the description below. Become a member of the Lemon Garden. If you want to join any of the services, swing trades, tutoring sessions, day trading room, it is all open to you. You'll find all the details in the Discord. Okay guys, that is it for this recap. I hope you got something out of it, and remember, leave a comment down below. Disagree with me, agree with me, I want to hear your opinion. I love to hear your opinions. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.